Hi guys. Today we will analyze Vertex Pharmaceuticals stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The long-term trend is still neutral. The stock has traded sideways between $180 and $295 since October 2019. The short-term trend is negative. It is advised to wait to see how this turns out. Strong support levels are around $243 and $236. Next strong support level are around $227, $205 and $180. Strong resistance levels are around $255 and $263. Next strong resistance levels are around $280 and $295. In the last month the stock has been trading between $233 and $286 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.8 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since April 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 35% per year, for last 5 years. We see that the average profit margin of the stock has been around 36% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 136% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Vertex Pharmaceuticals Company: bad, average, and good. First scenario. Vertex Pharmaceuticals will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 6%. Future profit margin would be a low, 20%. Future free cash flow to net income rate would be a low, 80%. In this case, the fair value of the stock today would be $181. Second scenario. Vertex Pharmaceuticals will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 8%. Future profit margin would be average, 22.5%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $244. Third scenario. Vertex Pharmaceuticals will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 10%. Future profit margin would be high, 25%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $321. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 9.49. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Vertex Pharmaceuticals, analysts forecast growth rate around 8% per year in next 5 years, and future P around 18. Again, I will use 3 different scenarios for Vertex Pharmaceuticals Company: bad, average, and good. First scenario. Vertex Pharmaceuticals will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 6%. Future PE would be low, 18. In this case, the fair value of the stock today would be $122. Second scenario. Vertex Pharmaceuticals will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 8%. Future PE would be average, 20. In this case, the fair value of the stock today would be $161. Third scenario. Vertex Pharmaceuticals will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 10%. Future PE would be high, 22. In this case, the fair value of the stock today would be $209. As you can see, today the stock is overvalued, $254, even if we expect the company's high performance in future. The fundamentals are good, and the stock is expected to show a medium growth in the next 5 years, but the stock looks overpriced at the moment. Remember, all pharmaceutical stocks are risky. The significant cost, and long elapsed time between drug discovery and approval, are what make investing in pharmaceutical stocks risky. So, you need an extra margin of safety here. Also, the stock has been in a downward trend since April 2022. Be careful. I may consider buying the stock, if the stock drops below $200, and when it shows signs of reversal. Company strengths. Vertex Pharmaceuticals is an American biotechnology company, engaged in developing and commercializing therapies for treating cystic fibrosis. Vertex holds a monopoly position in cystic fibrosis, with the blockbuster drug Trikafta, which is its main growth driver most likely until 2037. Opportunities in pain management and kidney disease give Vertex the chance to drive revenues toward the $20 billion mark long term. The company remains well positioned to significantly expand its pipeline in the following years, through internal and external efforts. Vertex's return on assets of 17% and profit margin of 31% are amongst the best returns in the industry. The company has a return on equity of 23%. This is comparable to the industry average of 16%. The company is debt-free. Based on estimates for the next 5 years, Vertex will show a medium growth in earnings per share. The EPS will grow by 10 to 13% on average per year. The revenue is expected to grow by 8 to 12% on average over the next 5 years. Risks. Risks for the company include the potential failure to obtain regulatory approval for pipeline products, or new indications for existing drugs, and strong competition from companies, such as AbbVie and Novartis. There are also a number of smaller companies testing cystic fibrosis drug candidates, which could pose a risk to future profitability. In addition, drugs may not be approved for government reimbursement, an important factor due to their very high price, with certain Vertex drugs priced at over $300,000 per year. The high prices may also lead to public backlash. Vertex is highly dependent on the success of its cystic fibrosis franchise, and it could fail to diversify, if its other pipeline candidates are not successful. Gene editing programs could disrupt Vertex's hold in the cystic fibrosis market. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.